And now with the latest business and market news, over to Jayne Edwards.
Alan, Wall Street capped off a fairly mediocre week with some more selling on Friday. The Dow, S&P 500 and the Nasdaq each lost nearly 1% as investors worried about the retail sector and Eurozone debt. Profit reports from retailers Gap and Aeropostale warned of higher raw materials costs and tepid consumer demand, and came at the end of a week which also saw disappointing housing and manufacturing data. But business networking site LinkedIn provided a bright spark, doubling its IPO price on debut on Thursday and raising expectations for possible share market floats for Facebook and Twitter later this year. There was little to celebrate over in Europe, where ratings agency Fitch downgraded Greece's debt on Friday, and the Eurozone was pressured by the IMF over its handling of the sovereign debt issue. That led to the euro losing 1% against the major currencies and a jump in gold. Looking at world markets over the week, most ended broadly unchanged, with Europe the sole mover down by 1%. Now with all the news shaping our local market, here's Tom Elliott.
Well, as you just heard, the Australian share market did pretty much nothing this week. There was, however, plenty of corporate activity around. Firstly, Foster shares were up slightly. Now that it's de-merged from its wine business, many people think Foster's could soon become a target of a global brewing giant like SAB Miller. Also, Austar shares up over the week. It seems quite likely that a deal will soon be struck with Foxtel, and many people think that will be struck at the rate of $1.50 per Austar share. Still, no formal takeover has been announced yet. Telstra shares were up. Now, if a deal with the National Broadband Network is imminent, the company could be in receipt of a $9 billion cheque from the government. This would be good news for Telstra shareholders, and the share price is already starting to react positively. Fairfax Media, the radio and newspaper network, has decided to, get rid of its radio stations. Fairfax has announced the sale of all of its radio licences if it can get the price it wants, rumoured to be between $275 and $300 million. Fairfax shareholders will see their company's debt loads reduced substantially. And finally, in the agricultural sector, GrainCorp shares were much stronger, particularly on Thursday. A big rumour went through the market that Canadian giant Viterra might make a move on GrainCorp very, very soon. Turning to the world of banking, and the big four banks had their collective debt rating downgraded by Moody's from AA1 to AA2. This was expected, however, and their share prices were actually mainly positive during the week. And finally, the big iron ore miners, Rio, BHP and Fortescue, got a nasty shock when the West Australian government decided to raise the state mining royalties on iron ore. However, this will be offset by a reduction in the MRRT, that's the federal government's resource tax, so shareholder values were largely unaffected. Winner of the week is zinc and lead miner Kagara, up 18% after announcing positive drilling results at its Griffiths Hill resource in northern Queensland. Loser of the week is ATM operator Customers Limited, down a whopping 39% after announcing an entirely unexpected profit downgrade.